Jim O'Neill, thank you for making some time to be with us here today on Africa Investor Conversation Series.
My pleasure.
Superb. I'd like to sort of just jump straight into this.
Sure.
And, you know, we noted that you've spent most of your career sort of studying charts. It's well rumored that you went to bed at night worrying about the price movement in the morning. And if it moved slightly, there was a big concern for you. You sort of took the view that there's something in the world that you don't have a proper handle on. Tell us, is that what really makes...
You've been discovering my past.
We've been discovering,
closely, yeah?
Indeed.
That's a bit scary.
You know, and we just really wanted to understand, what do you think that's what set you apart, that intense focus on really wanting to understand and predict the outcome, and how has reading the markets changed over the years, and do you see it changing again in the next years coming out as a skill?
What a tough question to start. You know, I sort of grew up as a foreign exchange analyst, so it was sort of in my DNA,
right.
And well, it became in my DNA. And it's still kind of like my first love now. Everybody thinks of me as Mr. Brick, of course, but you know, when I wake up in the morning, I still try to guess where the euro-dollar exchange rate is. And for most of my, what is it now, 33 years, I have often said that the dollar Deutschmark exchange rate before the euro and the euro now is sort of like the world's biggest fruit and vegetable store. And so everybody knows about everything all the time, and you can transact in that currency pair any time from about 9 o'clock on a Sunday night London time, continuously through till, 10 o'clock on a Friday night. Right. And so there's not many markets like that. So I say all of that because it's tough to beat the market, particularly in so if the price has moved quite a bit, that tends to suggest to me that something's happened that people didn't expect.
Right.
So it makes me want to search for what is it that's going on that common analysts don't really kind of get.
Sure. And now we understand that you're doing a series with BBC.
I've done it.
You've done it?
I've done it.
Tell us about how that related to Africa, and give us an interesting inside story about...
So it was great fun for a start. So what happened was, nearly a year ago, I left the almighty GS, 20 very happy years there. And many people were trying to persuade me to do various things, and my criteria were, if it's not better, it's got to be different.
Right.
How, in conventional finance, how can anything be better than what I was doing at GS? I felt a very lucky person there.
Yeah.
So I was intrigued by things that were pretty different, and the BBC approached me about doing, I call it my version of a Michael Palin, travelling around a number of emerging economies to make a radio documentary.
Yeah.
And many years ago, I'd written something about all the economies that were more than 1% of global GDP, and they shouldn't be called emerging economies. And in addition to the 4 BRIC, this is a bit pedantic, so apologies, but bear with me.
Sure.
After the 4 BRIC countries, there's 4 more: Mexico, Indonesia, South Korea, and Turkey. Which, when I published this paper, a Korean journalist 2 days later wrote this blog piece saying, Jim O'Neill's created another acronym, MIST, which I didn't know that I had, and it kind of stuck. Right. So when we were discussing things with the BBC, one of them rather astutely said, you don't really believe, do you, that South Africa should be treated at all as South Korea should be treated at all as an emerging economy anymore? I said, no, because its wealth is nearly that of a G7 country. It's like an insult. Yeah. So he said, why not take South Korea out and put Nigeria in? Because you're always talking about Nigeria these days, and it would be different, and it would be fun, and it makes mint.
Right.
So that's kind of where it came from.
Okay.
But it follows a number of years where I became more and more intrigued about Africa in general, whatever that means. It's probably inappropriate to just think of Africa in general, but with that caveat, I have got more and more intrigued, particularly about Nigeria, because it's, at least 15% of the continent's population.
Absolutely. Your PhD focused on investigating OPEC surpluses and the like.
Well, you have done your homework.
All right. I mean,
this guy's good. He's done a lot of homework.
With all the oil and gas finds in the continent, do you still have a sort of one eye and a sort of latent interest in what OPEC does, or how the continent, with all these new sort of oil and gas finds, how that might influence the OPEC story?
I often joke that I spent 3 years doing a PhD about oil and I learned nothing other than never do a PhD about oil prices, because it makes the foreign exchange market seem easy. So in a way, it taught me a lot. So I'm always very skeptical of consensus views about oil, because during my PhD, it was conventional. It was at the time of the second oil price crisis, and it was conventional thinking then that oil prices would go to $100 a barrel. I still have a stack of research this big, where people were writing all this stuff, real top academics, and of course, it spent the next 25 years going down. So that's one of the few big things I learned in my PhD. So I've become quite not a cynic, but quite a hardened market person when it comes to things related to oil. And I also believe, which is a huge issue for many African countries, that this thing known as the Dutch disease, where countries become too lazy on their commodity wealth, it's a problem for a lot of them.
Super. Well, you're seeing in Africa a number of countries are trying to establish sovereign wealth funds. I think there's probably about 6 at the moment, but it's projected to be about another 20 or so in the next sort of 8 to 9 years. So that's quite interesting.
That would be, if they're sincere, that of course would be a very sensible thing to do. It's what the Norwegians have done so successfully. So
absolutely.
If other African countries do it and do it properly, it's probably a pretty good thing to do.
Indeed. I mean, that redistribution or reorienting the wealth is really important.
Well, you're saving for future generations whenever the oil may run out or whatever. And this is very close to what I did in my PhD. It was all about trying to optimize production today versus the future relative to the alternative returns, including investments. So I think the Norwegians are probably a role model in some ways for many countries.
Oh, fantastic. I mean, in terms of this wealth distribution, you said that how it's reallocated and is one of the key upcoming challenges for mankind or for the global economy. What's your answer to your own question in that respect?
Gosh, I wish I knew. In some ways, that's the $1 trillion or the trillion renminbi question of our time, really. I think it's very complex. I participated in an interesting discussion about aspects of this in London last week. And many people talk a lot about rising inequality, but if you look at it truly globally, actually the past 20 years, many countries have seen themselves lift many people out of poverty, including parts of Africa. So on a global basis, inequality has narrowed. And in fact, I joke, but it's true, the United Nations actually delivered on its millennium goal to halve poverty by 2015, 5 years early. It's like the first time the UN has ever delivered anything ahead of schedule. And they probably don't even know that they did.
How do you know that they did?
Well, because I follow all these things, because of being immersed in the whole BRIC topic. In the early days, many Western people thought this was a huge threat, and it was contributing to the rise in inequality of Western countries. And in some ways, in some areas, it has. But even if that were fully true, which I doubt, is it right to stop other countries lifting themselves out of poverty and having prosperity just because it causes challenges to us? I think the answer is pretty simply no.
Good, indeed.
But of course, it's very complex.
Yeah. I mean, you've given tips on what constitutes a prosperous Britain. What would your ideas be on what might constitute a prosperous Africa?
Can I say something? When are you going to publish?
We're going to publish May.
So here's something quite controversial that grows in my mind. And it started when I came for the BBC documentary here in Nigeria. But again, this past week, this is my, 6th day here.
Okay.
And I would say all policymakers in Africa have got to start disciplining themselves on really basic things like turning up to meetings on time. It sort of seems like a crazy, weird, simple thing to say, but the sort of power of the signalling mechanism of that, in my opinion, could be transformative. I travel all over the world, meet lots of people, many policymakers, and amongst the many things that Africa stands out on is you can get invited by a policymaker to meet them, and quite often you have no idea whether they're going to turn up or not. And I don't really, it doesn't matter for me, because I'm kind of like a two-bit nobody, but if you as a leader or leaders of a country can't set those standards for yourself, how do you really expect your own citizens to learn a better way of life?
So professional etiquette, discipline.
I think respect for a daily organised schedule,
Yeah.
and the things that would logically then follow from
Okay.
it. Better governance, better leadership.
Yeah.
But you can do it by, I've said to well-known policymakers here, why don't you as a cabinet decide from now on, any time any of you turns up late for a cabinet meeting, you have to pay some kind of penalty.
What was the reaction?
Interesting idea. And you can't blame it, the people love to blame it on the infrastructure, the Lagos traffic. But guess what? As bad as it is, it's not the worst that I've experienced in the world. There's plenty of places worse.
Fantastic. So what does Africa represent to you as an economic opportunity sort of now, and where do you see it in the future from an economic influence perspective within the global and fast-moving economy, global economy?
My honest answer is I don't know.
You don't know?
I find, again, going back to the market experience part of me and maybe the market cynic, I worry that some of us have fallen in love with Africa purely because of Fed QE.
Okay.
And that all these ridiculous liquidity conditions that have gone on for years have forced investors to increasingly search for higher and higher return, and of course with it more risk.
Right.
And I don't dismiss that that's what's going on with Africa today. It's such a popular place to invest compared with, 3 years ago.
Sure.
And certainly if I were a policymaker, based on my experience, that's what I would assume.
Right.
Now, it might not be right. It might well be that there's some big positive things that are going on that will have durability way beyond this connectivity of global interest rates. And I do think there are 2 or 3 common threads that I find in a number of places, including, again, Nigeria. Number one is modern technology is allowing people to jump through stages of development that just were impossible when I was young. Today, you can use a mobile phone to find out prices of things at a market where somebody will know whether it's worth making the journey to try and sell the thing.
Yeah.
Transformative for parts of rural Africa.
Yeah.
So there's the first thing. Secondly, as I touched on, you have quite a few returning, well-educated African people from the States and the UK. And I've often thought that net migration is probably a pretty good leading indicator of a country's future. Because if your young, educated people want to be there, as opposed to getting out, I think that carries quite a lot of powerful messages.
Indeed.
And with that, in some countries more than others, there is evidence of a stronger, more credible governance standard that's been learnt from some Western countries. So all those 3 things together, throw them in the pot. I think that's what makes Africa potentially very different today.
Okay. While you're at Goldman Sachs, did you ever oversee or establish any Africa's specific funds, or did
Well, during my days as the research guy, running Goldman's fabulous economics department, I was the first person to make sure we started doing some Africa research. In fact, I employed a young lady that's become very famous, Dambisa Moyo, who you probably met, who did that job for us very briefly. She went on to better and more wonderful things as an individual. But I thought it was really important that we did that. And I don't know, but I think today they still have something. When I joined the asset management division, we considered having a devoted African fund. But we declined the decision to set one up because we knew we'd be able to raise a lot of money, but we were worried it would dilute some of the other things we were doing in the emerging market space. And we were also worried that we may raise too much money that would be actually difficult to invest. I think one of Africa's trickier problems with everybody in love with the place is how can you actually deploy the capital?
Everyone chasing the same deals.
Yeah, exactly. I'll never forget, I think it's coming up in the next couple of weeks. A year ago, I was a guest speaker at the private equity conference in Cape Town. And there's a guy I knew stood in this massive queue to check in. And I'm like, well, what are you doing here? And he said, isn't anybody who's anybody here these days? I'm like, oh, not sure that's a good sign. Because you've got to be, I often say, you have to be careful of a lazy consensus. So going back to the question I asked, people should ask themselves, is there something really different going on? Or is it just because of QE and perhaps what I call the old China boosting commodity prices?
Right.
It's a very important question that people should constantly ask themselves about Africa.
So obviously you're in the asset management industry. One of the key challenges that the continent faces is that it has a very small sort of local or indigenous asset and fund management industry.
Yeah.
What would your advice be to the policymakers about how to try to create the right incentives to establish a well-constituted and competitive, internationally competitive fund management or asset management industry in Africa?
Pretty simple. I actually wouldn't concentrate on that. I would say do not do that.
Okay.
Concentrate on doing the really important things like leadership, governance, education, credible macroeconomic policy, and the capital will come.
Okay.
Trying to focus on setting yourself up as a financial centre, which I've seen many places talk about in my career, Moscow in the past 2 years included. You know, when I hear that, I'm like,
okay.
What do they really mean?
Yeah.
You know, if Africa does good things policy-wise, the capital will come.
Sure. Would that hold true for the fact that a lot of the policymakers in Africa now are thinking about how can we invest regionally? And
well, that is a different thing. Amongst the things that Africa needs to do better on, one of the top things, in my opinion, is to start trading with each other.
Yes.
Historically, African countries, possibly for reasons that old colonies are guilty of causing, they spend far too much time fighting with each other.
Yeah.
And there's a lot of evidence from international trade theory, huge amount of evidence, that international trade is a win-win, that obviously some sectors lose, but it's a net gain for both sides. And it is quite encouraging to see the beginnings of some of this, but I'd say that is a bit of a different issue than having a financial centre. Because if you do stuff like that, the finance will come.
Absolutely. I mean, we're looking now, what you're talking about now in terms of the sort of intra-regional trade is it's probably about 12 to 15%, depending on whose numbers you believe of.
And what was that 10 years ago? Probably half or less, I would guess.
Indeed. One of the key things I'd like your view on is IntraAfrican investment, which actually is only about 5% of total FDI stock in Africa. And now, there's a move to get the pension funds, the African pension funds, who are projected by 2050 to have in the region of $7 trillion worth of assets. And that's less than 10 of them. And the sovereign wealth funds. How do you think, the market should evolve so that pension funds and sovereign wealth funds in particular feel more comfortable investing across border in the continent?
So I was at another event in London recently with a bunch of academics about African infrastructure, and this topic was at the core of it. There were sort of three, again, rather basic issues. The first of which, I'll repeat an aspect of what I've already said. If policymakers do credible things, the money will come. They shouldn't spend too much time on trying to build some kind of notional framework for investment. It's like, show credibility, show consistency, show compliance acceptance, and make your proposals about whatever the investment are credible. So that, assuming that would happen, the second thing I would say is I think the world's sovereign wealth funds, as well as maybe some private family offices, are in a really fortuitous position relative to other investors, because they're not subject to the same regulatory madness that has become so fashionable in the West in particular for the past 5 years. Western pension funds can only invest in stuff of a very high credit rating. So that eliminates immediately most of Africa. And I think the problem there is that policymakers in a regulatory sense are always fighting yesterday's war. And today they confuse liquidity with safety. And I think there is a grave need to relax some of those regulatory constraints, because I think for many of these kind of investors, in principle, the notion of investing in a Pan-African fund, in principle, is pretty high. And then the third thing I would say, also contradicting myself slightly, of course, is there is a lot of capital going into private equity funds. And I find myself personally thinking that the VC early stage opportunity is probably where the better returns are going to come from. Problem for a lot of people with that is you don't need so much capital, and a lot of the big guys can't be bothered with that, which gives great opportunities for those with smaller capital to deploy, I think.
Definitely. In the UK, you're involved with cities and urban regeneration and just sort of giving advice
Yeah, it's a big part of my new life. I really enjoy it.
You know, you talk about economic zones and increasingly the Jones syndrome. Can you take us through what that means, and whether that could apply to regional economic integration in Africa?
Well, I think linked to what I said a little bit about trade, it's an aspect of the same thing. And again, it's so weird in my career. I've sort of latched onto repeatedly really quite simple things which seem to surprise the hell out of people. But I learned through my BRICS research that big urban areas generate a lot of activity. It's pretty simple, right? You go back to the British Industrial Revolution, you go to the California Gold Rush, growth of Japan, now the growth of China and India.
Yeah.
You know, the one common reoccurring thing is kind of that. So as it relates to this job where I'm chairing this Urban Growth Commission about trying to get more growth outside of London, the fact of the matter is London's the only big city in Britain. If you look at the world's biggest cities, nowhere else, including my beloved Manchester, really register.
Yeah.
So, but Manchester and Liverpool are 30 odd miles away. Manchester and Leeds are 30 odd miles away. And so why can you not do things involving at least infrastructure and maybe explore administrative things to kind of make it seem like one mass? So I've got myself into a bit of the controversy about so-called HS2.
Yeah.
You know, why not start that thing between all these northern cities as opposed to in London? And it's like creating another equivalent of a tube system for the north of Britain. Now, for the region, of course, nowhere near so easy because it's such a huge geographic landmass. But I would say the same sort of principle is obviously relevant for trains. When I come here in this mad, beautiful place, Lagos, the fact there's no subway system is just incredible. Yeah. And the fact there's no train system between Lagos and Abuja yet, I mean, it's crazy. Friends of mine tell me that actually in Abuja, there's not even a bus system. So people have to walk for hours or pay crazy money for taxis. How can you expect them to participate more in economic improvement unless you make life easy for them?
Sure.
And at the core of it, it's basically the same thing.
So you're saying that the continent should also have a focus on the secondary cities, because right now there's a lot of focus on the top 10 cities, the fastest growing cities, but they're the obvious London equivalents in the African context. But no one's really saying the secondary, well, some of the hotel groups are now beginning to say...
I think if you could link them more together with infrastructure, then it becomes more feasible. But without that, without any smart thinking by policy leadership about trains or supporting an independent airline company, why is Virgin Airlines, why did it never succeed here? I mean, and I think I know bits of the answer, but the government should just give the regulatory environment. I mean, in principle, as African people get wealthier, the market for low-cost airlines between all these cities, you would think is huge.
Sure.
You look in somewhere like Indonesia, that business is growing extremely fast, and why not in Africa?
Well, you've seen EasyJet make its move now. It's in Tanzania. I'm looking for licenses across the rest of the continent.
There you go. I didn't even know that.
Okay. So yeah,
there's something else I've learned today. So that makes a lot of sense to me.
Fantastic. I mean, just on the policy level, you see a lot of tensions traditionally between central bank governors, ministers of finance, but in Africa in particular, it's sort of leveled as that's the reason why the cost of capital is so high in Africa. Is that realistic?
Wow. You know, I have a contradictory view about this, and I'm not dodging the issue. You know, on the one hand, good governance and credible governance gets rewarded with a lower cost of capital because people can rely on the policy making being broadly constant. And if you look at what's happened here in Nigeria the past 2 months with the central bank governor, hugely credible figure in the international markets, it's kind of the wrong thing to do. And it's quite interesting that late last year, the Nigerian equity market had not been brought into this weaker thing that was going on in lots of these so-called emerging markets. But now, I think year to date it's down, 9%? And I think that's a sign that policymakers need to be more careful. Now, against that, of course, the truth of the matter is many of these places are very young democracies, and you can't just take it off the shelf because the fact the Bank of England's done it for 300 years, or the Federal Reserve Board has, and just like, here we go. Because you gotta educate people, including the politicians, to understand the importance of these things. So it's not easy.
Do you think the cost of capital in Africa is obscenely high? Probably about where it should be? Something else?
Well, I'm going to give you a really strange answer. So I realised yesterday that I've been to Nigeria more times in the last year than any other country in the world except the US.
Right.
I'm kind of like, why? Am I like a leading indicator, a lagging indicator? Is it because my beloved Manchester United have been so badly? You know, what is it? But I suspect whether the level's too high or not, I think if I put everything together, we are entering an era where it is likely the cost of capital in Africa will come down.
Okay.
And there are decent opportunities to be had from investing here.
But what sort of, how come down, give us an indication of what that,
I have
broadly speaking.
I have no idea. You know, one of the beauties of being out of my whole life, I don't have to forecast anything.
Okay.
So I love that part of my post-Goldman Sachs life.
Oh, I'm going to ask you to give us a bit of an indication on something else. Obviously known as a currency guru. What would your advice be to Pravin Gordhan now to get the rand back under control in South Africa, the Minister of Finance?
So you may be aware, a long time ago, I was invited to be the independent witness for the rand inquiry.
Now I've learned something new.
Right. So rather controversially, I said in my opening comments, I don't really know why this inquiry is even taking place. If you have inflation targeting, concentrate on that. Stop thinking about the rand as being some kind of virility symbol. You know, if rand weakness is going to contribute to higher inflation expectations, then it's a problem. But to be as obsessed about the rand as so many South Africans seem to be, I'd like, forget it.
So even right now, with seeing what's happening to the rand?
Well, what can they do? The other thing I would say, and this is a little bit deeper, the fact of the matter is we live in a world where the US financial markets are more important to world markets than the US economy is to the world economy. So we're in a very peculiar position. And so if it's South Africa, if it's Nigeria, if it's Brazil, if it's India, you can't control much of that. You know, and the Fed's job is to not worry about the consequences of what they do for you. And the only long-term solution is for these BRIC countries, of which BRICS countries, South Africa rather cleverly crept itself in there. Never asked my advice, by the way. But
we'll come to that in a minute.
Yeah, I'm sure. Why not? Why not show more commitment? Why not announce a big series of joint, you know, some sort of BRIC local currency denominated bonds?
Okay.
You know, you make yourself a victim of this system by just being so linked to the US dollar and US capital markets. So you're a hostage to that, and there's nothing that the minister can do about it. He's not the only one in that position. But what I would also quickly add, you look at India and Indonesia in the past week, their stock markets have hit new highs, and their currencies have rallied. So it also suggests that if people perceive, even despite Fed tapering, policymakers are trying to do the right thing, the markets will reward you. And if I were Pravin, I'd concentrate on that. Forget about the currency.
Forget about the currency. So what about the first-time investors who say, well, Jim O'Neill's been to Nigeria so often, as you say, are you a leader or a lagger? But if they were then to come to you and say, well, Jim, you know, how do I get into Nigeria? I'm a first-time investor. There must be opportunity here, else you wouldn't be there so often. How would I
find myself trying to philosophically wonder about that. I don't know whether it's my ego, and people in Nigeria absolutely love the fact I put this N in mint. So I get invited to come here like every other week. It's sort of ridiculous. But I hope it's not that, because that would be a really bad reason. I find myself really quite positively shocked by the creativity of a lot of African people, particularly in Nigeria. And I am actually, this morning I had a meeting with somebody where I'm thinking of taking a personal stake in a startup company. And I think I actually have thought about doing that as a business. Smart people that understand finance way better than me say, nah, don't do it.
Right.
But they say, why don't you, explore one or two ideas as they come up, and that's what I'm doing. And so I'm quite happy to devote some of my own capital to investing in private business opportunities. I wouldn't invest in public markets here. I think there's a bit of I don't like all these funds that are being developed, but in terms of individual opportunities, I would.
Okay. And obviously, you're famous across Africa for the first BRICS acronym, although you've done sort of had many other sort of intros into the market. Were you surprised with the way that the market responded to that? I mean, was it a pragmatic, I understand that this can be a leading model, or is it just a case of, listen, I was just doing my job and hey, look what happened?
Well, yes, I was surprised, and I'm also obviously I'm actually really pleased because I feel it's kind of it's also a bit pathetic that has sort of influenced the world a bit, And who would have, my mother and father that both have died, although my father died 10 years ago, so he was alive when I created the acronym. He had no idea what it would become. Right. But they would have been proud of me. So, I've got a lot of respect for my parents working hard to give me an education. So I feel at a minimum, I've given them back some kind of reward.
Absolutely.
But I think it's the BRIC thing in particular has sort of changed the agenda.
Yeah.
And so, I am really surprised. And of course, it was the BRIC political club which escalated it to a whole new level.
Absolutely.
But today it's fashionable to bemoan. Markets jump around like crazy. Right now, some people are saying I'm the biggest idiot that was ever. The BRIC thing was ridiculous after all. But many international companies have really embraced the concept, and I'm very proud of that.
Fantastic. No, and you should be. I mean, but based on your experience originating and then sort of grandfathering BRICS, in hindsight, is there anything that you would signal in a different or message in a different way that could facilitate more intra-BRICS activity, both trade and investment, intra-BRICS?
Well, I'll answer you about two aspects of your question. First of which is not what you really asked me, but because some of these BRIC economies are currently showing some disappointing growth, there is this view around that the whole thing is over. And I sort of regret that I didn't spend even more time saying at the beginning that this is these countries' potential rather than what is actually going to happen.
Right.
And particularly for the famous 2050 stuff, we did say that. We said this is not a forecast, it's their potential.
Yeah.
But unfortunately, after 2 years of disappointing growth in Brazil, Russia and India, people are like, the whole thing was stupid anyhow. Right. And so I slightly regret that. I don't know about regret, because it's great they set it up, but I bemoan the fact that, 5 years on, the BRICS political club and the BRICS bank have not done anything. It's like, well, why you make such a big song and dance of it, guys, unless you're going to do something.
Follow through. Yeah.
And there's many areas that they could, and I keep waiting for them to offer me the job of running it, but it's not happened yet.
Well, you never know. This is going to be watched by a lot of people, including some of those guys. What's your experience of global GDP investors and their trends towards emerging markets? There's been this whole new set now. Maybe you want to give us your own definition of a global GDP investor.
Investors, again, with my experience and slight cynicism, the big investment concepts people need to think about are, again, simple things: greed and fear.
Right.
And people vary between the two. So, as it relates to emerging markets, as we came out of the credit crisis in 2008, because it didn't seem to hurt any of the BRIC countries, the whole planet suddenly was like, these countries can do no wrong forever. And of course, people were like, this is just incredible, and people would say, I'm some kind of international hero. And of course, that was kind of ridiculous.
Sure.
And now, and that, of course, in hindsight, it was a really good time to sell BRIC investments. Today, 5 years on, it's almost the opposite. And from my experience, the best opportunities as a global investor come when the crowd kind of doesn't want to play.
A bit of the Warren Buffett, be fearful when people are...
Very much so. I spoke at a really interesting event for one of the most respected sovereign wealth funds, it'd be 4 years ago. And I was on one of the panels, but the interesting part was not that panel, it was another one.
Right.
Where there was this quant guy that presented what I always believed, but I can never show, that you can't get diversification as a global investor away from the S&P most of the time. It doesn't improve your risk-return characteristics.
Right.
When it does, is if you are fast and flexible enough when there's a crisis.
Okay.
And if you have a management structure and a philosophy to allow you to do that, you're going to outperform. And this is one of the reasons why I think sovereign wealth funds and family offices today probably in a better position than a lot of hedge funds and certainly a lot of people inside banks and pension funds.
They can be more nimble. And,
well, yeah, they have a lot more. You know, banks and pension funds are so controlled by regulatory things.
and Basel III is creating more opportunities for the sovereign wealth funds because banks are coming out of all these opportunities.
Definitely.
So China slowing down, aging population. What are the implications of that for Africa's growth?
I love what Sanusi coincidentally wrote in an FT comment piece about, I don't know, a year or so ago. He said, our future doesn't depend on China. And I teased him when I met him afterwards saying, I bet you had 500 Chinese guys stood outside your office. But he's kind of right. African countries' futures depend on themselves.
Yeah.
Don't get deluded into, because China grew by 10% and commodity prices are going up forever, it's going to continue, because it won't. And here we find today it's not. So this is ridiculously simplistic, but nonetheless, I'll say it. We're looking at a new China. The new China has got very different winners and losers from the old China. The old China winners were big commodity companies, big commodity countries, and small ones. And of course, many people participating in real luxury, top market consumer things. That's out.
Right.
China's focused on trying to get more quality growth based on what I call luxury light, not using as many commodities, and trying to invest in a lot of energy efficiency.
Right.
And also with its wages rising, it means a lot of other countries that suffered from China are now competitive. So again, going back to the BBC documentary, Mexico, probably one of the biggest winners of the new China. I often said, you told me you had Mr. Jeff Immelt on, the great GE phrase of nearly 20 years ago, who needs Mexico when you've got China? Today, it's like, who needs China when you've got Mexico? Mexico's a huge winner of this. And when I think about it in an African context, if you could get more focus on a more competitive labour market, actually Africa could become more serious as a manufacturing place than probably most people would dream of.
By doing what exactly?
Well, because it's no longer, it can compete with China. China's a really expensive place to do low value added stuff.
Right.
And Africa's in the same time zone as all these European markets, and it's closer. So it could probably try to get involved in that if it was serious. But to be honest, I don't see a great deal of signs of that.
So tell me, are you still a believer that, even though you've given us a bit of background about how it happened, that South Africa should have been added into BRICS? And in hindsight, do you think Nigeria should have been in BRICS from the start?
I'm going to cause some controversy here, so I apologise again to South African policymakers because they get really annoyed with me about this. My definition of what constitutes a BRIC is an economy that is at least 3% of GDP or has the potential to be that or more. South Africa's never going to be close to that in my lifetime. It doesn't have enough people.
Right.
So economically, South Africa is not a BRIC. China creates another South Africa every 3 months. So economically, I don't think it was a great idea. And in some ways, I wish the Chinese might have thought more carefully about that. Second thing I would say, which is even more controversial, the Nigerians don't see South Africa as their representative in the G20 or BRICS. As I'm sure you're probably aware, there's a strong possibility sometime in coming weeks, revisions to Nigerian GDP will make Nigeria bigger in South Africa. We're going to talk about
that just now as well.
So the idea that South Africa is sort of like the representative for sub-Saharan Africa is not accepted in an important place like Abuja. And what is intriguing, now going to the Mint thing, there is the beginning of conversations between the Mint policymakers as to whether they should try and do things together a bit like the BRICS. And in fact, with it, whether Nigeria should become part of the G20. And I think when you think the place has got 15% of the world's of Africa's population, why not?
So if you were to do BRICS all over again, would Nigeria be in there?
No. Because it doesn't have the potential to become 3% of GDP in my lifetime.
Right.
It could get reasonably close, but it'd have to have everything going right.
Sure.
But it's justified as being part of what I call the next tier, which is the so-called mints.
Right. I mean, so just staying on Nigeria very briefly as we sort of wrap up here. What's your personal view on investment opportunities in Nigeria?
Well, it's not for the faint-hearted.
Right.
Although in general, serious investing shouldn't be for the faint-hearted any time about anywhere.
Right.
So people shouldn't go into it because it's a fad. People should go into it knowing that they may lose a lot of their capital.
Right.
Because it's higher risk. But I'm a strong believer that higher risk does equate to higher return. So for investors to risk some small part of their capital, I think it's increasingly a pretty sensible thing to do.
You talk about risk. What do you think the biggest risks are associated with investing in Nigeria? At a micro level, effectively, you said, I'm looking at an opportunity. What's your thought process, or what do you think?
Well, the one I'm looking at relates to technology and the fact that there's so many people here. And if these guys have good corporate leadership, they've been going about 18 months, I shan't say who they are, but they could become a really successful company. They could become like a PayPal or an M-Pesa.
Okay.
And that's the sort of thing that I look at. What is the edge? What is a country's edge? And is a new business trying to exploit that edge with really good leadership? And that's what I look for. Now, the problems in Nigeria include a number of risks. One is, of course, same as anywhere else, macroeconomic risk. What happens if the Naira now collapses because there's less credibility for the central bank? Possible. On the micro side, how can you really trust some person that you've been on a flight from London to Lagos about and only met 2 or 3 times, and know they're not only going to be able to develop a good business, but exit? And it's not easy, which is why there's not many people that are very good at doing this sort of thing. But that's the sort of way I'm thinking about it.
So what advice would you give to the policymakers in Nigeria who say, Jim, help us position ourselves to be able to make ourselves more attractive for global capital this year, 2014?
I'd go back
what do I need to do?
And I said it to a member of the cabinet last night at a dinner, and I'm going to say it again tomorrow at a conference I'm speaking at. You, as the lead policymakers, your cabinet, start penalising yourselves for not having a daily organised agenda that you stick to.
Okay.
I'd start with that, because if people saw that, people are like, wow.
Change.
There's change. These people are being serious.
Yeah.
They're not just sort of flirting. Because a lot of people, and very conservative people, and they may be right, think, oh, this is just another one of those fads.
Right.
And yeah, the fast money can get in and out, but if we get sucked in, we're going to lose our money. And the only way for policymakers to deal with that is to prove that they're trying to do something different.
Sure. Well, something different has definitely been this GDP rebasing. Do you think that's really going to, in Nigeria, supposedly making it a larger economy than South Africa, do you think that's going to lead to increased investment flows?
I think not necessarily, for 3 reasons. One, people have talked about it now for 3 months. Secondly,
should they not have talked about it for 3 months and just come out with it?
Another one of the few things I've learned in my life in finance, under-promise and over-deliver. So what would be really bad if after all this talk, actually the revision shows only a small increase. That would be really bad. So I don't know why they've made so much noise about it without doing it. And that, I hope the higher estimates that people are talking about will come through. Because if they do, it will register in a number of people's minds, including G20 policymakers. If Nigeria is going to be bigger than South Africa, how can you leave them out of the G20? It's supposed to be a club for the top 20 economies of the world.
Matter of fact, huh? So, in your view, should more African countries consider rebasing their economies to seek to get similar, renewed recognition of any kind?
If they think there is good evidence that the data series underestimates the size of the economy, of course. Of course.
Okay.
That's the way you signal to people to get attention and to persuade smart, conservative people to treat you more seriously.
Right. I mean, mints now. I mean, in terms of mints, why should global investors take notice of mint countries? Bottom line.
Let me say in answering you, I really regret this part of the BRIC thing. I never said that people should start off BRIC investment funds.
Right.
And so...
But Goldman has one.
Goldman, do they still have... I often tease the people that did it. It took them 5 years to do it.
Right.
And they were late. There were
Okay.
a couple of... It was so funny, this is when I was a research guy, I'd have people from all these other big European retail funds saying, can they use our research to brand their BRIC funds? And we're the almighty. I'm like, well, hang on a minute, what are we doing?
Yeah.
And then, because these things seem to do well, Goldman did eventually have one.
Okay.
But I think it's a bigger economic... the mints and BRIC thing are a bigger economic concept than an investment fund.
Right.
But I do think things involving the consumer in the BRIC and mint countries are the most important global investments of our generation.
Okay.
Whether they are all right to invest in at the same time or not is a completely different matter.
So what does the mint business community need to do to really unlock this opportunity, to translate it and drive it, or at least be a knowledgeable actor?
Well, judging by the inquiry and phone calls and emails I get since I launched this thing, quite a lot of them are trying to do quite a lot. But again, to be a little bit repetitive, do the right thing. Okay. There's a real danger related to this over-promise and under-deliver.
Right.
There's no point having a load of hype about being part. And the BRICS countries have made a mistake.
Sure.
They had a big hype about all this BRICS Development Bank.
Yeah.
2 years ago nearly. What have they done?
It's a communication exercise in many respects, as you say. I mean, to manage the expectations.
Well, communications, from my experience, is all about content, ultimately. You can say whatever you want, and it might sound good, and you get great sound bites, but unless the content is sustainable, you're going to set yourself up for problems.
So that's your advice to the presidents in mints, how to get it right.
Do the right thing.
Do the right thing. And if there was one indicator that analysts came to you today and basically says, what would symbolize success of the mint concept in your view and its global influence as a block, what would your response be? Analysts sitting there.
One thing.
The most important thing.
Goodness me. Probably in the long term, education. Because at the end of the day, economic growth is about the number of people that work and their productivity. And the key to productivity is education.
Right.
And if people in Africa and the other mint countries cannot get the most basic of education, it's always going to be the potential that never materialises. So initiatives that are really trying to change the dial about education, that's what gets me excited. What the next quarter's GDP is, I don't care about that kind of stuff.
I mean, that's similar to what Jeff Immert was basically saying, that he's a big believer, GE's a big believer in SMEs as the sort of wealth creators, the job creators. But he was basically saying that until you can invest in educating that and building that entrepreneurial class, you're probably going to miss it.
Well, I predict you the next 2 or 3 years, some of the most creative people in Africa, including some of them well known here in Nigeria, are going to start doing that.
Fantastic.
Because they realise the importance of it.
In terms of
I often call it enlightened self-interest.
Right.
And I actually met one of them today to discuss it, and it was fantastic to hear.
Okay, superb. Just one of my last two or so questions. Globally, the potential exclusion of Russia from the G8, what does that mean for the global economy and ultimately Africa? Well,
in some ways, they'll be doing everybody a favour. I mean, what does if I go back to the paper I wrote 13 years ago, The World Needs Better Economic BRICS, what the hell does the G8 exist for anyhow? What is the point of having a club that doesn't include China, but includes Russia? It's ridiculous.
Or do much, actually.
Or, of course, it doesn't do much because it's not very effective.
Yeah.
So, in a silly, facetious way, the Russian conflict is kind of good because it probably means the end of the G8.
Right.
And I wrote a piece actually 2 weeks ago that Bloomberg carried, saying, why not be really smart and use this as an opportunity to actually try to bring global governance up to where the global economy is.
Yeah.
How can we have all these global meetings other than the G20 where China's never even at the table?
Right.
China's half the size of the United States today. When I dreamt up the acronym, it was less than a quarter.
Right.
China creates another South Africa every 3 months. It creates another India every 2 years. China's bigger than Germany, France, and Italy put together. Yeah. And yet, we have a G8 that doesn't include them.
So what would the next dispensation look like?
So my opinion, G20 is a really legitimate thing, but it's too big and unwieldy.
Yeah.
But it should stay. And Nigeria should be invited to join. Inside of it, we should have a new G8. We should have the US, Japan, the Eurozone countries collectively as one. So forget Germany, France. What is the point of these guys all being in this thing when they share the same currency and the fiscal policy is controlled from elsewhere? Why are they in it?
Sure.
I already said China's bigger than those three put together.
Yeah.
So the Europeans as one, Japan, the US, China. I don't know about the UK, maybe the UK because it's outside of this thing. But the part of me that wants to be not conscious that I'm Britain, I'm like, I can't say that because I'm British, so exclude the UK because we're not that big. And you end up with actually something like a G4. And at some point, the IMF has to take leadership and try to develop a mentality where these clubs can have relegation and promotion.
Right.
You know, every time we have a new G, it's important for the first time they meet,
Yeah.
and then it loses its relevance. And it's because they lose their relevance. So why not have a sort of some kind of monitoring and scoring system where countries can join and
But what would you have them do? I mean, we've seen...
Well, because at the end of the day, and if I go back to my early days as a foreign exchange guy, the G5 Plaza Accord, one of the most influential things in my career. And that's because those 5 countries represented the best part of the world economy.
Right.
And they had a meeting and decided the dollar's too strong, we need to get it down.
Okay.
We need something like that, not about the dollar, but about many issues for the modern world.
Including maybe the dollar not being a default currency or being a default currency. Does
That
this
as
logic
well at some
still
stage.
hold that the dollar should be the default currency?
I think a really interesting question is going to be what the IMF does with the SDR reform at the end of 2015. They're due to, as they are by law, reanalyse the components every 5 years. And on many criteria, the renminbi should be in it. And whether they are bold enough to invite them and they accept or not is a key decision about all of this.
Will that be better or worse for Africa?
I think it would be better, because it would be the beginning of a world where US dollar capital markets are not so important.
Right. Just lastly, what's your view on the global outlook for 2014, this year? What are you expecting to see as you go to bed at night? You typically wake up in the morning and looking at the markets.
So I learned from years of managing so many sophisticated economists. There are about 6 or 7 indicators that I track, not least because I helped develop some proprietary ones.
Right.
And I think they're really useful for telling you what's going on in the world now.
Yes.
So the Korean trade data, for example, Korea is the fastest country in the world to report its trade data. On the 1st of April, they will report their March trade data. Okay. Korea doesn't trade with Jupiter. Right. So that's really powerful information.
Indeed.
Secondly, the weekly job claims in the United States. It's a really good leading indicator of unemployment, and it's actually a really, oddly, statistical good leading indicator of the US stock market. Okay. And there's 4 or 5 other things. I'm not going to say them all because I have to put them out in my next book.
Sure, not a worry.
No,
we'll buy the book.
I'm joking. So when I look at all the latest ones of those that I've seen, as I do every month, I say the world's doing okay.
Okay.
It's not doing...
Better or worse than last year?
It's about the same. But what is interesting is that the so-called developed world is generally doing better.
Right.
But against that, of course, China's slowing down. And China's weight is so big, it kind of offsets the improvement in the developed world. So it's kind of about the same.
When do you see the recession sort of heading in the right direction, in other words, out of the recession?
Well, I would add, I think we are in the right direction. What a lot of my contemporaries greatly underestimate, and I'm glad you asked me, is on one level, the whole global credit crisis was all about America not saving anything and China saving too much.
Right.
And the rest of the world lives off those two cylinders. So this decade is sort of all about the US and China swapping places with each other. And one way of measuring that is what's going on with their balance of payments. Today, the US current account deficit is close to 2% of GDP. Now, somebody that's been stooped in 35 years of foreign exchange, that's close to a minor miracle. And China's surplus is 1/3 of what it was also before the crisis. So there's a lot of adjustment going on. So the fact that both places are coming out of this mess in a somewhat different structural shape than before, I think mitigates for the fact that the recovery is not as strong as people might have hoped for, because we don't want them to recover in the same way they were, because that's what caused the problem.
Right.
So structurally, I find myself generally a lot more optimistic for the world than virtually anybody I speak to.
But has anything really changed? Someone once said, you know, ask a banker, and a banker will say, no, we're coming out of it, it's all being worked through. But, and then the person retorted and said, how can you say that it's all okay when you have such violent peaks and troughs that cause these issues? Have we dealt with the violent prospect of peaks and troughs?
People have got to be realistic. I'd say three things about that. First of all, as I've said, greed and fear are close cousins, and you are always going to have some kind of crises, and it's not bankers or anybody else that's causing them, it's human beings. Because people think something that seems good will go on forever. So the next lunatic gets involved, and we get to finally the point where there's no one left. And that's how you have a crisis. And so there's point number one, and that's fact. And if policymakers try to tell all your listeners or viewers that that's never going to happen again, I would say don't listen to them, because it's reality. The second thing linked to that, we need to have policymakers that don't have a regulatory environment trying to fight yesterday's battles. So force bankers to take away the punch bowl. The famous Citibank CEO comment, you know, we danced to the last record, or whatever it was, something a little bit more subtle than that. If bankers can't do that. I mean, I've worked in the industry a long time, and you always, particularly those lend money, think this time it's different. But so you've got to put in a regulatory environment where they don't have they don't control that. So you make counter-cyclical regulatory policy, and that's the way to try and deal with that. Third thing I would say, which goes to my optimism, China is bigger than Germany, France, and Italy put together. The 4 BRIC countries are nearly as big as the US. If these guys carry on doing vaguely what they're doing, the world economy this year will grow by, this decade, will grow by more than it has the last 3. And most people don't realise that because they don't understand how the world economy
will
links.
the recognition about the global influence accord to that underlying point that you've just made?
Well, I would say after 2015 and this thing about the SDR, if China's not getting more involved, I would worry that we've got stuck in a world where governance is so Western dominated and economically it's not so important.
Doing business in Africa, you can't afford to be without Africa Investor.